Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by A Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with A Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space. All right, we're back for another episode of the Mortgage Broker Podcast. I'm Dean Lawton, and we are powered by the A Better Way Mortgage Group. Again, we're here with two other hosts, my partners Jason and Derek. We're looking forward to jumping into our second episode here, and this one is about preparing for the gold rush. The gold rush is coming, and we're going to talk about that and how to prepare for that. So why don't we start off? Stats. I mean, the stats are the proof is really in the stats, and that is why we are, tongue in cheek saying that the gold rush is coming. But we're pretty serious about this, and you should be too. So, Jay, why don't we jump into some of the stats here?
There's a lot of different stats coming out, but coming off the back of a challenging 2023 for a lot of us. Some kind of light at the end of the tunnel is that what we're hearing is roughly $675 billion of mortgages are actually coming up for renewal between 2024 and 25. This is representing roughly about 2.2 million separate mortgages across Canada. So for those of us that have been in the industry for a long time and have captured some dates, this is an amazing opportunity for us to kind of pick up the business.
When you think about like the logistics of why that many mortgages are coming up for renewal, if you think back to the start of COVID, 2020, most people were taking a 5-year fixed or 5-year variable, which would land yourself into 2025 or 2026. And then over the course of the last 2 years, while we've been dealing with rate hikes, a lot of people have been going into 1, 2, or 3-year terms, hoping that they can just kind of get themselves through the craziness and ideally land on a renewal with a lower rate. So it does make sense why these are all happening. And, from a broker's perspective, I think there's probably a lot of people that haven't focused on renewals. They've been very driven on purchases and new referrals and what have you, and they haven't done a lot of due diligence and tracking and staying on top of this kind of stuff. And, historically, banks can be pretty competitive at time of renewal too. And is it really going to make sense for your client to jump through the hoops and do an app and pay legal fees and all this kind of stuff to switch lenders? But in this market, I absolutely think it is because of what we've dealt with over the last 2 years. I think there's a lot of opportunity for refinances, debt consolidation, extending amortizations. I think there's a lot of Canadians that need some relief, and I think this is the opportunity for it.
Just knowing those stats, those are huge numbers, to say the least. And if you're in a Better Way broker, as an example, you have access to tools and technology that can really support this, along with campaigns and workflows that are already ready to go. So these are sort of the things that we're going to touch on today. But just to touch on the fact that many renewals are coming up, then what goes to my head is just how many consumers are going to be looking at some serious payment shock and understanding that there's a few things you can do to plan and prepare for that. And of course, getting in touch with these clients, the sooner the better. If anyone has a mortgage coming up for renewal from now till really the end of 2026, you should be getting in touch with them some way, somehow. And it could just be a simple email drip campaign. Probably should be a phone call, to be honest, a text message at the very least. So having technology, for one, to set up that you can actually get these automated workflows going out, whether it's a text or an email. If you don't have that, make sure you do. I mean, of course, we have technology that we utilize regularly in our office, whether it's Velocity, which has a CRM built into it with a lot of these workflows are already ready to go, or Blue Mortgage, which we also use quite regularly. Again, a couple plugs for those two pieces of software, but those are two items that are set up and ready to do this. So really understanding that you need to have this set up now. It's crucial that you get this set up right away. And if you just simply don't have the data, maybe we can just touch on like where is the data, like sourcing your data, like how are we getting that? Maybe Derek, you can touch on that.
The 675 billion in mortgages, like that's obviously a gold mine on its own. But like if you don't have the data really is the gold as well, right? Because you could easily miss out on all of this if you're not getting ahead of it, sourcing your data, making sure the data is clean. So if you're a broker and maybe you haven't tracked things, you don't have a CRM, if you've been doing deals, your data's in either Filogix or Velocity, whatever your point of submission platform has been, like the data is there. It might not be bang on if you didn't update it and close out the files, but a lot of the data is there, and you can extract that. You can extract it and import it into a CRM. Again, if you're not using a CRM, you should probably stop everything else and find a CRM, because it's like you're going to need that going forward. Regardless of this gold rush, you need a CRM. But sourcing it first, right? So you got to find it. Again, if you're with DLC or MA, the networks would have some data on file as well that you can source, you can bring back. So get as much as your data into one place as possible, into a CRM. And then the big project, again, if it's not clean data, like if you had a refinance approved that was supposed to fund on December 1st, but it's been pushed out for whatever delays, and now it's funding on January 5th, if you're not updating your Velocity or your Filogix, like your data is not clean, right? So you're actually going to have to go through, and you can pay people to do this too, but you got to go through and make sure it's all correct so that you can actually communicate with your clients properly.
100%. So cleaning up data, like we've talked about this with our team on training calls many times, and the director of WOW position comes up quite a bit, and that's a topic that we will definitely address in the future in its own episode. But that's a role that can go through that database and start making phone calls. And if depending on how busy you are, how many deals you're funding per month, like if you're somewhere around under, let's say if you're under 5 deals funded per month, you should certainly be doing these calls yourself right away. In fact, you should have been doing them all year, but let's start now. And making those calls, cleaning up the data is part of that. It's part of that process to make those calls and then update, make sure they got the right email, make sure they're still in the same house they didn't sell and they aren't renting now, or what have you. Like, make sure you're asking the right questions, cleaning up the data, updating the data on that call. And then that will just ultimately clean the database up it's really the best way to do it, is getting on the phone.
What we have to do is kind of identify, what really is going to move the business for us this year and going forward. And I think, as to Derek's point earlier, is a lot of our attention was focused on the transaction before, and I think primarily now that focus really does have to be on this data collection and really honing in on the database and reaching out to people that you've communicated with in the past. I mean, I think that's imperative right now, given the stats that we've kind of hammered on here a little bit. But now more so than ever, I would say is where we as the broker industry can kind of shine in terms of being that professional beacon for our clients to talk to, and that's all about just kind of having your stuff in place and knowing what you're looking for.
Yeah, definitely. I mean, you don't have to overthink the data either. If this is a new thing for you and you're setting up your CRM and you're cleaning up data, like really you need to make sure the client contact information is correct. The birthdays are in there, which are typically always correct in the application. You want renewal dates and probably like the term length, right? If you have that on all of your old files, you can at least start tracking, doing annual reviews, doing your renewal follow-ups. But going forward, I mean, if you want to, we'll do another episode on this, but you can go very in depth on prime minus what is it, an arm or a verm, what lender is it, like you can go balls to the wall with this kind of stuff if you want to, and that can really help you pull lists and mine data and market to people that need to be marketed to at that time.
Yeah, it's a good point. I mean, like, to just really simplify things, you're right. Like, you just need to have the proper contact information for the client, ensuring you have the term and the maturity date, and even the rate for that matter is obviously nice to have, but it's not super important. As long as you know when this mortgage is coming up for renewal, you're in a good position. Now, one thing to point out, if you did fund a lot of variable rate mortgages for clients, they could have called their lenders and locked in, and those maturity dates could be slightly off. So back to cleaning up data, those are questions you're going to ask as part of that call. Is if you're calling a variable rate customer, asking like, hey, have you locked in? Have you made any changes to your mortgage since we last originated this mortgage for you? And that will get you, some, quick responses to, okay, actually, yeah, I did lock in. They gave me a 3-year term and I did it on X date. So you're okay. So you can just ultimately already start to put a new number in place for the maturity date and updating data that way. So again, it's just something to really keep an eye on. So just going from there, I mean, outside of sourcing your data, we've covered sourcing your data. You did mention the networks. I just wanted to touch on one thing there. Whether you've been using Filogix in the past, which many brokers have probably most of their data on Filogix if they've been brokering for let's say more than 5 years. That's a good resource going back to the FileLogix team and getting your data from them. Depending on if you made brokerage moves in the past, not all your data will be there. So hopefully you've tracked things on a spreadsheet or some, you have data somewhere outside of that. But typically, I just want to touch on that. Like, you can get a lot of your data from those technology companies. So another piece of another tip there.
Yeah, I guess just maybe the last piece to kind of wrap this up is just touching on some actual strategies to capture these renewals. Like, emailing them and calling them is great, but like, what are you saying and how are you doing this, right? I think a big thing, like we touched on earlier, is being the broker that's calling them and getting them on the phone and understanding what's going on in their life and their financial situation is going to be key here. As we all know, when a borrower comes up for renewal, all a lender typically does is send them an email or snail mail with a renewal offer, and it's typically just a 5-year fix and a 5-year variable, right? Like, there's no strategy, there's no conversation. These people probably have debt, or a lot of people have something going on in their life, right? Maybe it's even just a move next year and they shouldn't be locking into a 5-year fix. So having that conversation, understanding, if they have any pain points, if they need to restructure, and, no one wants to pull out money, no one wants to, extend their amortization, but if it's going to help someone get through a tough time because they've accumulated debt over the last couple of years, and it's not even just at this point in life, people go through hardship all the time. So that would be the first piece, is getting them on the phone, understanding their situation, talking to them, talking to the fact that they're essentially a free agent when you're up for renewal. You can go to any lender, you can go to any product, you can completely restructure your mortgage, and there's no penalties to do so.
Yeah, good point. So just looking at like a follow-up strategy as an example, like you mentioned, the banks are pretty dialed when it comes to like 3 months out. Just with what you said, it's not a lot, but there's that letter going out in snail mail. Maybe there's a call as well. Maybe there's an email, but outside of that, that's pretty much it. So where you could really win those battles is, again, at the 6-month mark, maybe at the 9-month. We know brokers that are reaching out at the 12-month out from maturity, 9-month, 6 months, and 3 months, to go even deeper. And digging deeper is really probably not a bad idea here. And like we said, if you got renewals coming up even in 2026, just getting ahead of it with some drip campaigns and having that stuff go out now is just going to put you that much further ahead. So maybe just one other item I like to talk on, just from a strategy perspective, is locking in a rate. So we've talked about this, like locking in at 120 days out. There are obviously strategies to doing that. Might not make a whole lot of sense going forward, just given where the climate of rates are supposed to be headed. As we know, fixed rate mortgages have been dropping, given the bond market and everything else. With the variable rate, prime rate expected to drop this year, maybe the lock-in strategy doesn't make a lot of sense. But as we know, given what happened last year, that could easily change too. And we could see, maybe a reversal in what all these experts are thinking, what we're thinking, or what we're hoping, is going to be rates coming down. If in the event that doesn't happen, looking at that 120-day lock-in strategy is probably still a good idea to at least prepare yourself to just protect yourself from potential reversal here.
I would always think it's a good idea for that reason. If rates did go up and you've locked them in at 120 days, at least they have a great backup in place. But I also think you get a certain commitment from the client going through that whole process, getting an approval, letting them know that this is just a worst case scenario for you. Like, the fact that you got ahead of that and did that for them, I doubt they're going to shop you. And as long as they know that you're on top of it and you're going to make sure every single rate drop is passed right down to them, they're probably going to stick it through right to renewal date with you, right? And it's because you were there for them ahead of time.
You mentioned just earlier, like the lenders at renewal are really not being creative. At the end of the day, like this is a renewal department that is essentially tasked to reach out to these clients, like you said, at the 3-month mark, and it's really just a reminder: hey, your mortgage is coming up for renewal. Here's your renewal offer. It's probably a 5-year term of some sort, whether it's a variable or a fixed. And that's about it. Sign here and move forward. And unfortunately, a lot of Canadians just sign those documents and move forward. But where I want to touch on from a creativity perspective is just a discussion around refinancing and being on top of that. Like, that is super important to start to look at everything and treat this as a proper plan. Like, that you are. In a sense, this is a financial plan, and you need to really understand everything that's going on in that client's life. And this is where not only are you providing value to the client by doing this, but you're making the client much more stickier to you. So what I mean by this is do an updated mortgage application, go through everything that they have going on, especially the debts, and understand, is there an opportunity to not only consolidate some of these debts, but drop interest rates on all of them. And again, if we're looking at car loans, boat loans, line of credits, credit cards, we obviously know, like, regardless of mortgage rates being higher than they've ever been in the last 10 years, we're going to be able to save some money, significant amount of money on these other products. So look at that, capture that, refinance those debts and roll it in, because now it's no longer renewal, it's a refinance, and that renewal agent is not going to be able to compete with you. So really looking at that, and that does bring significant value. And then back to the payment shock, looking at re-amortizing these loans is a really good idea for just helping anyone from a perspective of getting through maybe another hard time. And a lot of people look at that as like, well, why would I want to add more debt? Is that a smart choice to advise somebody to add more debt or add more time to their debt? And it can be looked at as a temporary solution. And what I mean by that is, if we're extending the amortization out by another 5 years or more than that, as an example, looking at that as, okay, this is going to get us through the gap of, while rates are still high for another year, 2, 3 years, it's going to bring payments down, because in this particular situation, maybe the client needs that help. They need to increase cash flow. Once things are back to normal, from a perspective of maybe whatever they're going through, maybe they're making more money now, maybe rates have come down, that's where you can adjust things back down and get back on track with a payment plan that is more in line with where they're heading currently, opposed to just looking at it as a negative of, I'm adding more time to this.
Yeah, I'm just looking at a stat for a $500,000 mortgage on a 25-year amortization. If that person locked in 5 years ago at 1.94, the increase in payment at a 5.45% rate, which is actually pretty competitive in today's market, it would be $1,000 increase per month, which a lot of people just can't sustain. So,
yeah, so I mean, it certainly is a great strategy to bridge a gap and again, provide some value, but more so just really looking at those other debts that we can consolidate. Like, that's a no-brainer to increase cash flow and save on interest. So outside of that, is there anything else you guys wanted to add?
I wouldn't necessarily say an ad, but we open with this comment, and I'd suggest we kind of close off of it, is know the stats. And let's just reiterate it again. $675 billion in mortgages up for renewal 2024, 2025. Do you have a strategy? What is a strategy? Do we have to change the strategy? And if you don't have one, whoever it is that you need to reach out to, I'd say that that's priority one for us going forward.
100%. So if you're in a Better Way Mortgage Group broker, definitely reach out to us if you need help with this. Like, we can absolutely help you get set up immediately. So certainly reach out. A couple things we just wanted to touch on as we look forward. We do have a pretty in-depth event scheduled this year. We're doing a lot of local events. We have a few events that we're traveling for. So we're going to touch on just events that are coming up, and that might be an industry event as well. But for the most part, these are a Better Way specific events. So if you want access to these events and you're not in a Better Way mortgage broker, reach out to us. But primarily, these are ABW events. So one thing to point out, we do support a charity called Backpack Buddies. It's an initiative that we've taken on for 2024. I want to touch on that because we are volunteering on February 13th. We have a day at the warehouse for Backpack Buddies, where there's a group of us going to be there volunteering. Equitable Bank is actually going to be joining us in that day. So just essentially just a quick, background of Backpack Buddies. There is a weekend hunger gap that a lot of children suffer with every day. So, most kids that can't afford, or most families that can't afford to, send their kids to school with lunches, there is a school day meal programs for almost every school district has a school day meal program. Sorry. And the problem here is that they go home for the weekend and they have no food. And this charity ensures that kids go home with a meal with food for the whole weekend. So it's essentially a backpack with food for the weekend, and that's really the gap that we're trying to help here. So that's the charity we're supporting this year. So I wanted to touch on that. You're going to hear about that a lot when it's just something that is obviously close to our hearts. We have 3 young families here, and pretty crazy to think that people are going hungry in our country. So anyways, I want to touch on that because that event is coming up. We are volunteering that day. So we still have some spots available if you want to join us. Make sure to reach out on that front. Also, we have a save the date for February 22nd. It's our A Better Way Mortgage Summit. It's called Ascend 2024. It's a full day educational summit and the Sheraton Guildford Hotel. We'll announce speakers and all that stuff will come out in drips over the next couple of weeks, but registration for all that will be coming out shortly as well. Just want to touch on that, save the date for that event. And yeah, I think that's pretty much it for now. I mean, again, we have a lot of events coming up, and we'll continue to talk about those as we go forward. If you haven't already subscribed to the podcast, please do. It means a lot to us. Give us your feedback. We want to hear it. Anything you want us to talk about, we're certainly going to touch on that. We already got a great bankroll of topics that we're working on, and going to continue to deliver more and more of this type of content. So hope you enjoy it and have a great day. Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Lastly, a vital announcement about Backpack Buddies, our chosen charity for 2024. This remarkable organization addresses a hidden hunger issue many are unaware of. In British Columbia, while school districts provide meals during school hours, numerous children face food scarcity at home, particularly during weekends. Backpack Buddy steps in to support these vulnerable children, ensuring they have easy to prepare, familiar food for weekends. This is achieved through collaborations with schools and an extensive distribution network. Your contribution can make a significant difference. With just $20, you can give a child in need a food bag from Backpack Buddies filled with enough meals and snacks to sustain them over the weekend and more. Once again, thank you for listening, and see you on the next one.